What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I just got done with my shift, and I'm going to do a review on DYNEX Capital. This is a very interesting real estate investment trust. So we're going to look over it and study it. So by the way, we're almost at 10,000 subscribers, so make sure you hit that notification bell after you subscribe. Let me know what you think of this dividend stock. This is a very interesting dividend stock. Many investors like these guys. Many people praise this stock. Many people don't like it. So I'm going to go over my rationales as to why either I like it or don't like it. So again, make sure you smash that like button after you subscribe. Hit that notification bell. Let's check this readout right now. So here's DYNEX Capital. It's sitting at 1527 right now. It is down a little bit. So many people are praising this stock, and people are on social media saying they're buying the dip on this one. This is a big dividend stock that people like. So it's sitting at 1527. Dividend yield 10.22%. Woo. PE ratio 3.41. We're going to look a little bit more into that. Average volume 916.18K. Market cap is 679.78 million US dollars. G range is 1396 to 1815. Stay range is 1524 to 1560. And its previous close was 1538. So let's check these guys out as a company. So I'm going to read on their website their strategy. At DYNEX Capital, we focus on expected risk-adjusted outcome of any investment, which given our use of leverage must include the terms of financing and the expected liquidity of the investment. Key points of our investment philosophy and strategy include focus on capital preservation, simple executable strategy, disciplined allocation of capital, manage risk at the enterprise level, stable and acceptable long-term returns. In executing our investment strategy, we seek to balance the various risks of owning mortgage assets with the earnings opportunity of the investment. We believe our strategy of investing in agency and non-agency mortgage assets provides superior diversification of these risks across our investment portfolio and provides ample opportunities to generate attractive risk-adjusted returns while preserving our shareholders' capital. And let's look a little bit more into these guys, a little bit more digging. Let's check this out. So right here in their past, this is according to Google.com, they were way up in the 180s, and then they dropped significantly back in the 2000s. So they started off at 62, it took a huge drop at 15, jumped way up, and then it jumped way back down. So 2000 was 506, and it was creeping up in the 20s. 2010, it was 24, 27, 29, 30s, and now it's back down. So there is a trend that's going back down. So against the S&P, not the most attractive right there. So that's not, you're not going to get competition against the S&P. It's kind of like in a stagnant slope and a little bit of a downward slope, up and down. So that's another thing that's kind of a red flag to me. So now we're going to go over their revenue and their dividend history. So first, let's discuss their mission and objectives. This is what we need to know as dividend investors. DYNEX's purpose is to make lives better through careful stewardship of individual savings, providing the capital for financing of homes, and strengthening the communities we serve. So they're a financial services company committed to ethical stewardship of stakeholders' capital, expert risk management, disciplined capital allocation, social responsibility. What they do, they generate dividend income and long-term total return through the financing of real estate assets, and by doing so to support the growth and revitalization of communities in the United States. So they rely on core values to sustain high-performance culture and to consistently generate attractive long-term returns. Stewardship, performance, integrity, trust, kindness, equity, and inclusion, innovation, and collaboration. So now let's check out where the money's going and the revenue. So 2015, this is in millions US dollars, it was 100, 2016, 91, 2017, 94, 2018, 110, 2019, 170, 2020, 96, and then 2021, 60. So there's a little bit of a downward trend from 2019 to 2021. Now, you can blame the pandemic. That's one thing. But let's look more into these guys. Let's look in June 2021. The revenue was down negative 37.73 million. Operating expense was up 19.79. Net income minus 43.76 million, down 122.46%. Net profit margin 115.98, 18.98%. Earnings per share 0.51, 41.67. September revenue 20.91 million, down 54.27. Operating expense up 37.52. Net income down 14.03. Net profit margin down 67.11. Earnings per share 0.54. Revenue December 2021 20.73 million. Operating expense 6.67. Net income 14.06. So the downward trend. March, okay, went up a little bit. Revenue 124.64 million. Operating expense 7.43 million. Net income is a little bit down. Net profit margin is down 1.30%. Earnings per share 0.44, minus 4.35%. Revenue June 2022 36.83 million. It's up. Operating expense up. Net income up. Net profit margin is down negative 31.32%. Earnings per share 0.40, which means it's negative 21.57%. So where are we headed? Let's check out their dividend history. Let's start in 2009. It was 23 cents quarterly. And it hit 25 cents in 2010. Then 2011, it was 27 cents. Then 2012, it was 28 cents. And then to 29 cents. This is quarterly. Then it was to 27 cents. 2014, it's down to 25 cents. Then it's down to 24 cents, 2015, 2016. And then 2016, it's down to 21 cents. And then 2017, it was 18 cents. 2019, it was down to 6 cents. And then sometimes when people go into damage control, they go to a monthly dividend status to try to protect themselves. I've seen this happen before with a lot of these dividend stocks that aren't very attractive. They go from quarterly to monthly, and it's just not attractive. So look, 2019, 18 cents. Started turning into a monthly, and then it was down to 15 cents. In 2020, it was down to 13 cents, and it has not rebounded since at 13 cents. So already it's decreasing its dividend. Dividend growth in 5 years is minus 9.09%. The payout ratio is 103%. Number of dividend increases in the last 5 years is 1. If you bought one share, you made 156 with a 10.22% dividend yield. I'm not so hot on these guys. That's why I don't buy them. Again, this is not financial advice for entertainment purposes, only disclaimer in the description. But I'm completely turned off from these guys as a monthly dividend real estate investment trust. Not attractive at all. Kind of reminds me of AGNC Stock and a little bit of NLY. I'm just not turned on with these guys, and I don't own them. It's not. Now, if they hike their dividend, sure, maybe I'll be attractive, but not my cup of tea. So I just want to go over this monthly dividend REIT with you guys. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button, and I appreciate you guys being amazing. We're almost at 10,000 subscribers. So one more thing with Zacks. They're an industry and equity trust. They're at the bottom 45%. Zacks ranks them as a sell. Price per share has gone down. Some people are capitalizing on the dip. I just don't like it. I like dividend hikes. That's what I'm all about. You guys take care and have a good one. I'll post a video tomorrow.